Hey everybody, in today's lecture we will be discussing the single most important thing which runs the market, and that's liquidity. And then we will discuss how to trade using the liquidity sweeps. So we will just draw some vertical and horizontal lines and you will find out how easy it is to trade using the liquidity concepts. And then we will apply the strategy on the recent Bitcoin chart or ES chart to predict the next Bitcoin and ES move on the concept of liquidity. So stick with me till the end and I am sure you will be a wise person at the end of this video. Okay, so let's discuss the part 1 of this lecture. What is liquidity? So the definition is simple. When you want to buy something, you need a seller, and when you need to sell something, you need a buyer. So in crypto and forex market, the region with the liquidity is the region or price where there are plenty of buyers and sellers. So the price moves to that region to fill some orders and to close other orders. In short, the market can't run without liquidity. You need liquidity to move the price and to move the market in a certain direction. So if the market moves down and then suddenly it moves up, we say the sell side liquidity has been taken, because when the market moves down, the support level, it hits the stop loss of those having their long orders set. And if the market goes above the resistance region, we say buy side liquidity has been taken, because it hits the stop loss of the traders having their short positions. So the liquidity is the single most important thing and it runs the market. Okay, so now the part 2 of this lecture is how to trade using the liquidity levels. One interesting thing about executing ICT trading strategies is that to find the liquidity, you have to think like noob traders initially and then add some technical things to it. And I will explain it in a minute of what I mean by thinking like noobs. Okay, so you might have seen all the new traders. What they do is they draw a line at the rejection point and they call it the resistance point, okay? And then they draw a line where it pumps and they call it the support. So you also have to do it, and that's why I said you have to think like noob initially. So once you draw these lines, then you have to add some more technical things. But what the noobs do is they tend to long here because they think it has broken out and it will pump, but you can see it has come down and they get trapped. Okay, so if you are a professional and you add technical things, you won't get trapped. Okay, so this swing high, this is your point of interest, and this swing low, this is your point of interest. Why is this your point of interest? Because this was the last swing low which formed before sweeping this high. Okay, this was the last swing low before sweeping this high, so this is your point of interest. So here you can see the buy side liquidity has been taken. Okay, that's why this was your point of interest, this one. So once the price goes above it, you say the buy side liquidity has been taken. Now your next point of interest is this. So if the price closes below this, you say the market structure has got broken. So once it closes below this, everything turns bearish, and the next step would be drawing a fib level from the top to this bottom. And once the price goes above the 0.5 fib level, that's your area to short, and you will put your stop loss above this swing high. But if you get a bullish order block at this area and you don't get a close below this, okay, then it can pump. But here you can see you got no bullish structure here and you got a close below this. So once it goes above 0.5 fib level, you can short, and you can see the price has come down. Now, as I said in the start of this video, that we will predict the next move on the basis of this liquidity concept. So let me remove this first, then we will discuss the next move of Bitcoin. Okay, so here you can see, let me shift to daily. Okay, so you can see we got this high, then it came down, and we got the sweep of this high, and the liquidity, the buy side liquidity got taken, and then we got a close below this last swing low before forming this high. This was the last swing low before forming this high, and we got a close below it. So then again what you have to do is you have to draw a fib level from the top to the bottom. So the price is above 0.5 fib level, so anything above this you can short it, and your target will be these swing lows or these swing lows. Okay,